Welcome to the Retiring Real Estate Investor Podcast, where we will discuss how to defer taxes on the sale of your property, earning passive real estate income, and everything you need to know to go from active investor to passive investor. Join us as we interview passive investing sponsors, explore the journey of other retiring real estate investors, and share our due diligence process we perform to select passive investments. Investment advisory services provided by Insight Investment Advisors, LLC, a registered investment advisor. This podcast is only intended for clients and interested investors residing in the states in which we are registered to provide investment advisory services or exempt from registration. Please contact us to determine if the firm provides investment advisory services in the state where you reside. All content on this podcast is for informational purposes only and should not be considered investment advice. Material presented is believed to be reliable sources, and no representations are made by our firm as to another party's informational accuracy or completeness. Insight Investment Advisors, LLC and its representatives do not provide tax or legal advice, and nothing herein should be construed as such. Always consult with your tax advisor or attorney regarding your specific circumstances. Hello, everybody. Welcome to the Retiring Real Estate Investor. I'm your host, Brandon Bruckman. We're joined today by Don Spafford from Happy Camper Capital. Don, welcome.
Thanks, Brandon. My pleasure to be here.
So I wanted to get into it with Don about what he's working on from an investment perspective, because I know we haven't had anyone on the podcast to talk about what you're working on. So I want you to get into that. First, tell our listeners a bit about yourself. And I want to hear about, I shared some notes beforehand with Don. I want to hear about Don's experience, lived in Argentina for some time. So I definitely want to hear about that too, but tell our listeners a bit about yourself.
Yeah, thanks. Well, so currently I live in Idaho Falls, Idaho. And if you have no idea where that's at, it's southeast Idaho. We're about an hour and a half, west of Yellowstone. So a very big camping area, we'll say, for people who love outdoors and, mountains, hiking, that kind of stuff. I grew up most of my life around Omaha, Nebraska, since basically third grade. We grew up there in that area. Just moved here to Idaho about 7 years ago to help take care of my mother. But yeah, so that was kind of where I came from. But my educational background is related to finance, banking, investment science, portfolio management. I was planning to become a financial advisor or wealth manager at some point, but I pretty much graduated with those degrees like right before the 2008 market crash happened, and kind of at that point all those jobs were gone and the companies going out of business. So I was like, well, maybe I don't want to go down that path, right? So I actually went back to school and got an accounting degree, thinking maybe I'll just go to get a CPA instead. It's still somewhat numbers anyway, so should be fairly easy. And so I got the degree, but studied for the CPA, but never took the test. Just decided I didn't really want to do that anyway. So I just kind of hunkered down and just to get through that tough time and just see what comes out in the end. And then in that time, around 2010-11, my wife got her real estate license to be a realtor, and began working with investors as some of her very first clients. And that's kind of what opened up my eyes to real estate and looking into it as a possible option for investing other than just stocks. And that's ultimately what led us to where we're at today, I guess, just from that initial spark. But I lived in Argentina back when I was younger. So I think I went there when I was 21. I just turned 21 actually, and lived there for 2 years. Yeah, I went there for a 2-year mission for my church actually. So I was in kind of northeastern Argentina. Traveled around different areas around there, and I loved it. It was an amazing experience and great people. And my wife is actually from Paraguay, so we go back down to that region, as often as we can. We just spent last summer, we went down there for pretty much the whole month of June, just to, go see her family and then, hang out in the area. So yeah, it's a great experience. So I definitely encourage anyone that has the opportunity to travel to a foreign country, and not just to the touristy areas, right, the big cities and stuff, but get out into the we'll say the camps or the outskirts of the cities and whatnot, and get to actually see the country and see the people. And I think it'll help open people's eyes to make them realize the great blessings and things we have here in the U.S. we take for granted, so often. For me, it was quite amazing just to getting there, having that culture shock to get there initially and see what true poverty looks like. But then I lived there for so long, it became normal. I came back to the U.S. and I was like, "Whoa, culture shock again!" Everybody's driving new cars and pretty much wasting money on stuff. I'm like, "Man, this is just crazy." So yeah, it's a great experience to have that. For anybody that just needs to, I guess, appreciate what we have.
Huge advice there. And no offense to, I'm calling you from Milwaukee, Wisconsin, and it's 20 degrees today, and it's been colder this week. So no offense to folks that are taking the all-inclusive vacation to Mexico. I get it. But, man, get off the beaten trail. You'll see some things that, you don't get to see every day. And for me and my family, the most interesting part about travel for us is wherever we go, what is it like to be local and to be there? And how is it different from our experience? That's the coolest part for us, is to get to experience that. So it sounds like you lived that for 2 years to really get to experience that. Is there anything happening in the Argentinian real estate market we should be aware of? My brain starts immediately thinking, because real estate is probably very different in Argentina than it is in America.
Yeah. Well, I've got some friends here from Argentina as well, and they kind of keep me updated on what's happening there. But unfortunately, Argentina's having just a horrible time right now with their economy. Their their peso, their currency there is just totally just dropped and devaluated continuously still today. But yet things like that are still quite expensive. Even just I'll say Paraguay, which I'm kind of now more familiar with because my wife is from there. We go there more often, but we actually would like to purchase a property there to hold for like an Airbnb type thing for us to use also when we go. Yeah. But surprisingly, for a place like that where we'll say the average pay is just almost nothing, pretty much. Property is still a very big factor there, but housing costs and living expenses are almost identical to the U.S. I mean, wow. there's houses and properties there that cost just as much as any regular normal, you'll say, expensive market here in the U.S. as well. So it's not like you can go there and buy a house for $5,000. It's still going to cost you a couple $100,000, which again, for people that live there and maybe don't even make $5,000 a year, it's like that's I don't understand how that all works. But somebody's buying them, somebody's paying for them. But it's it's not a quite easy thing to just do and just go buy and have them, right? So it's something we're gonna look into though.
Caution, the Argentinian economic financial situation has always been difficult. So caution to those looking to snag up cheap Airbnb properties.
So when I was there, when I lived there, like the peso was the same as the dollar, right? So it had the same valuation. Wow. But since then, now it's like I don't know, way less. Yeah. It's like maybe I don't know. I just don't even know what it is now. It's well over 100 pesos per dollar or something like that. So wow. It's totally dropped. Yeah.
Yeah. Speaking of appreciating things that we have, as many in our space complain about rising interest rates and Jerome Powell, imagine that situation where there's constant sort of volatility and devaluation. How do you deal with that? So we should be more.
Plus, they do have like super high interest rates on your loans there. If you're looking to buy a house here, you'd be grateful for a 8% loan here. Yeah, it's like almost crazy that they can charge what they charge there. Yeah.
Get out of our box a little bit more and explore some of these other countries and see their economic situation too is a little bit different than ours. Let me pivot you back to, you have sort of a similar educational training background as I do. I always like to say that I missed the class on all these advantages of being a real estate investor. Sounds like they didn't teach that at your school either. Did we skip that day or something?
Maybe. I don't know. It's kind of funny. It was in one of my classes. It wasn't one class I took. It wasn't even a finance class that just kind of briefly talked about real estate. In fact, it was the federal income tax class I took actually that kind of briefly talked about real estate, but not in depth, and definitely not in my finance classes. Funny thing is, actually, just recently, honestly, like this week, I reached back to my my professor of my investment classes, and the person overseas, because my school had a investment fund that I was a part of. That you actually get to analyze and pick stocks and invest real money into those things, for the school fund. And anyway, so I reached back out to him recently just to see if by chance their fund would be interested in investing in real estate and add some alternative things, and to teach the students about real estate as well, because it's something that I was telling them it's much needed to have that education in there and understanding of alternate investment assets, right? Which he agrees. He's like, yeah, I do agree. Real estate is a great alternative asset that our students should learn. And he said, and he even said, I'll be sure to share your story with my students. But unfortunately, that fund can only invest in stocks, things like the endowment that was given to the school to use for that had certain restrictions. It can only be used for certain things. So the school fund can't unfortunately invest with us. But my goal is here sometime that as near a future as possible. I want to give more of a push to at least my local schools, my kids' schools, to create a financial understanding class of not just real estate, but everything about financing, and understand budgeting and all those things that kids need to know, and possibly even teach the class myself. So yeah, that's something I definitely want to push for, and I think it's very needed.
100%. That class is taught at our home. It's taught at night. It starts at about 7 p.m. I'm your professor. Because it's just not. It's not, and it is limited. Even in the amazing schools that we have around here, the courses are 1 or 2 courses that you see in that. I think there's 3 or 4 courses in high school that I took actually that were business based, that were kind of interesting. There was marketing, intro to accounting. It was actually in high school. I haven't seen it since. So there's still a lack of financial education and know-how that we have to jump over a little bit. Walk me through. Let me pivot you a little bit. Walk me through. Let's talk about Happy Camper Capital. Talk to us about sort of the thesis here and what you're working on. This is really unique.
Yeah. So this is, as you said, something that probably most people have not heard of, or at least not very much or know much about. It was honestly new to me just less than 2 years ago as well. So what we do is we purchase RV resorts, campgrounds, and marinas. So it's still a form of commercial real estate, but just not your standard multifamily, mobile home parks, self-storage, those kind of things that people are more familiar with. These properties we buy are to get a better understanding when I say RV resorts or RV campgrounds, these are not mobile home parks. These are not RV parks that are long-term stay. People live there. These are like destination vacation resorts. People go there, pull in their own RV or fifth wheel or just bring their own tent and camp. Put a tent down and camp there. But these are places you're going to go to just get away from it all. Right, go there, relax, have a good time, have great experiences. These properties have included amenities. You may have like a big lake with an aqua park or boating, fishing, that kind of stuff. You may have horseback riding, possibly even concert events. All kinds of different things that you would want to just get out and go do and go have fun, right? So that's kind of what we cater to, I guess. And what's great about these properties is again that these are essentially like a short-term rental at a multifamily scale, where you have these campgrounds have hundreds of campsites between the RV pads and cabins, other glamping options as well. So you're getting essentially hundreds of little short-term rental spots on a single property. And if you want to compare a short-term rental single-family home to a long-term rental single-family home, in most cases that short-term rental is going to always be much higher income than the long-term rental. And that's kind of like the model we're using in these spaces. So yeah, it provides great high returns for our investors. We do these as a syndication, so we purchase the properties along with other investors to invest with us, and sharing the cash flows and sharing the profits, sharing the appreciation, and also sharing the property itself. We actually encourage our investors to go to our campgrounds and hang out there and enjoy it, and kind of see it firsthand. The people that have been to a campground at some point in their life, at least these types of vacation destination campgrounds, right? They see it firsthand. They understand the hype around it. They understand how these things make so much money and they're fun. Some people that are investors that have never stepped foot in a campground, they just invest for the income. They once they actually go there and see it firsthand, it's kind of like has that like light bulb moment, like, wow, now I get it. This is totally makes sense. This works. And so that's kind of what we do when we look for these properties. We are for the most part sourcing them off market. We call up the campgrounds directly. In most cases, it's a mom and pop type owner, right? So they are usually there on site, running it, managing it. So we can call them up and talk to them directly, and find the ones that are willing to sell and work out a great price that works for them and us. And in many cases, we get seller financing as well. And then we would go in there and bring so we have our own management company as well called Beyonder Camp. So we come in there with our management company, implement our processes and systems, the software, all the things that are needed to really make the property efficient. Even as it is, if it's a great property, the mom and pop owners try to keep it simple. So we're gonna make it efficient so it operates better, produce more income. Then we'll add on our value add as well, which includes oftentimes expansion. We're gonna add on more campsites, more amenities, just make things nicer overall. Put in some like chargebacks on the utility connections and things like that. So so yeah, just all those things we're going to just increase the income and the value of the property. On a typical property, what we look to purchase with our investors, This honestly, this is what drew me to this type of property to begin with. When I was looking to invest in something to get, like, along with the title of your podcast, right, to retiring it from retiring with real estate, right? The main thing for me to retire using real estate was cash flow from day one. When I bought my first property, 5 years ago, I said, I need to build up enough cash flow that I can walk away from my W-2 if I choose to. And for me, actually, I put a goal of 5 years to make that happen, and luckily, I made that happen in 5 years. But a big part of how that happened was once I got into these campground deals, because the cash flow is, especially currently right on the current environment with high prices and everything else. There's nothing that I've found that can compare. These properties tend to deliver to our investors at about an average of a 15% cash on cash, with a 2.5 to 3x multiple on a 5-year hold. So basically, in the same 5-year period, if you can invest in some other syndication, you're getting much higher cash flows and you're getting much higher returns overall. And just as a comparison, at least for what I've seen, and most other multifamily syndications, for example, they tend to be very low, if any, cash flow, maybe like a 4 to 6%, maybe average is cash on cash, and sometimes that doesn't even kick in until year 2. And then at most about a 2x multiple, right? There's some maybe range there 1.7 to maybe 2.2 or so is kind of about average right now, is what I've seen anyway. And so if I can step in and say, hey, if you're, for example, the way I looked at this is a scenario. If your goal is to retire from your current W-2 job, right, or at least replace your income or add on additional income, whatever it may be, if you have a certain amount of money you can invest, let's say it's $50,000 per year, $100,000 per year, whatever it may be, what's going to be better for you? Are you looking to get that, say 5% average cash on cash with that money, or 15%? Right. So if I can get you a 15% cash on cash, that's basically tripling your current income from the other thing. So it's like you can get to that number you're looking for much faster and a lot less money out of pocket than investing in 10 other 5% deals, right? So yeah, that for me was the major thing that attracted me to the space initially, just to come on as an investor myself, and then just through networking, and end up meeting my now current partners at Happy Camper Capital, and becoming a part of a team. And so it's been very exciting for me to do that as well.
That's awesome. I've got about a million questions coming out of that. I'm hearing I hear overtones of vacation rental mixed with mobile home park from this aspect of that mom and pop sort of ownership, or I don't want to say inefficiency, because I think what I've seen mostly from the mom and pop run, and I'll apply self-storage to this as well, is they have a way that they do things. It's been producing cash flow for them. It's been great, but you see and others see the next level to go to that they don't quite see, or maybe not have the operational capability to do so. So I hear overtones of that, but I also hear characteristics of sort of a vacation rental item going on here as well, because we don't have people that are actually residents of this. We're not running a business out of it. Is that a fair thing for me to mix those two? If I put those two in a blender, am I getting to what this may be, or how I should think about it?
Well, so I try to get out of your mind, it's not a mobile home park. So just to get that out of your mind completely, right? Because like you said, those are long-term residencies, typically lower income, and sometimes brings problems with that. These properties are more like, we'll say, like a Class A, I don't know, like a resort, like you think of like the Sandals Resort or something, like fancy and nice. Not quite made to that level, but still, these are very nice properties where what's great about these properties is it's kind of combines people from all income levels. You got your very high income earners that are buying these $1 million RVs. They're going to go to these properties, along with say the average Joe that has a small trailer they're towing it with their truck, or pitching a tent there, right, just to stay with Boy Scouts or something. So they're all kind of hanging out together and enjoying the place together. They can all be at the same time, swimming in the lake, or doing whatever together, enjoying the concert or whatever it may be. So it attracts people of all walks of life to these places. But again, none of them are living there long term. This is they're just going there to have a good time, and then they go back home. So we don't have to worry about evictions and leases and replacing carpets and all that kind of stuff. And so it makes it much more, I'd say, somewhat easier, I guess, to manage in that aspect, right? You don't have to deal with people not paying and trying to get them out, going through the legal process. People prepay to come here. They reserve their spot oftentimes 6 months in advance or more, and then they stay there for their a lot of time, and then they leave. And if by chance, if somebody decide to not leave when they're supposed to, for the most part, usually it's a simple phone call to the local police to come escort them off for trespassing. So it's not a big complicated thing. Go through
Easy.
courts and yeah. So it's quite nice. But our main goal, of course, is just to provide a great experience for the guests that are there. They want to have great memories, have fun, and then come back again.
When I think about that, you mentioned there's various different sort of income levels that are enjoying that space. Is there an economic durability there through, say, a recession that you see historically with the assets?
Yeah. Well, exactly for the kind of the same reasons I was just saying is that there's two I guess broad spectrum sides of this. You've got the very high income earners that basically are in most cases not going to be affected by a recession anyway. They still have plenty of income, not risking losing their jobs, and they're still going to go have a good time. You've got a $500,000 RV sitting in your driveway. You want to go use it, right? You don't want to just leave it sitting there. So they're going to go out and go have it and have fun and not worry about those kind of problems. And then on the other spectrum, your very low income earners, no matter what's going on in the economy, people still want to have a vacation. They still want to relax and have fun.
Yep.
So they might be very more cautious on how they spend that vacation money. Maybe instead of taking a trip to Disney World or whatever, they'll say, okay, let's just stay somewhere nearby and let's go have fun somewhere. If you've got the place within a couple hours drive that you can do that, then yeah, people are still looking for that kind of staycation aspect, and especially say during a time of something like COVID, where you couldn't travel. Again, we bought tickets to go to Paraguay in 2020, had to cancel that and postpone it until this last year. We finally went, but in cases like that where if you can't go someplace anyway, in case like COVID, they give you the great aspect of having a private place of your own within your RV or cabin or whatever, but you're also outdoors where you can at least be out and then have some fresh air and feel safe, I guess. So that there was definitely a big rush during that pandemic that definitely increased people buying RVs and going to these types of properties, but that has not gone away, right? Everybody that owns RVs and campers still are going to go use them and still going to get out. And if for whatever reason they decide that it's not for them, they sell it. Somebody else is going to buy it and go still use it and do the same thing. So that kind of cycle will just continue. And the RV sales have been up each year over year, the last several years. It may be starting to come down slightly now, but it's still they're doing still record numbers. And as of right now, the current the highest percentage of new RV buyers are the younger generation, like the millennials and Gen Z. They're the ones that are out buying these, and in most cases, I think partly because the pandemic opened the opportunity for people to work remotely. So if I don't have something tying me down, like I'm still young, don't have a big family, why would I want to live in Idaho Falls my whole life? Right? I can say let's go travel the world and live in my RV and live someplace new every week or month and work remotely from that campground and and just enjoy life and figure out where you want to live permanently at someday, right? So that's been, I think, a big push as well. Just all these people that now can work remotely or taking the opportunity to travel and live the RV life.
Yeah, it's a huge thing that we kind of don't see going away, right? There's been this increased demand in, let's say, outdoor activities across the board. I talked to a few golf course owners here, and they said COVID's been bigger than Tiger Woods for us, and so it's been interesting to watch outdoor activity tick up. Talk to us a little bit about the supply of these campgrounds. You mentioned mom and pop owners is sort of what you're focused on, maybe legacy owners of that. Give us a feel for what the supply is that's sort of available for you to potentially purchase, and maybe how you go through that criteria of which sites make the most sense.
Sure. Yeah, well, currently there's, I don't know exact numbers. We'll say well over 15,000 campgrounds in the U.S. And there's more being built all the time as well. So as opposed to, you think mobile home parks, I think as far as I know, they're not allowed to be built new anywhere. But
huge
RV campgrounds,
those, especially in Florida. Yeah, we've explored that in detail. Giant restrictions on there. I don't think you'll see more new mobile home parks in Florida.
Yeah, exactly. But on the opposite side, though, RV campgrounds, these RV resorts, they're welcome. Most municipalities see these as a tourist attraction. People are going to come here, stay there, and spend money in the local community. So they welcome new development to these campgrounds, which there are plenty of new ones being built in Florida, for example. At some point in the near future, we will probably start building some new ones as well as part of our future plans. But so with that, yeah, there's still a big supply out there, and as of right now, there's not a whole lot of other players in this niche as far as those are doing syndications, right? You still got your private mom and pop owners are going to still maybe buy a few more here and there, and you got the big groups like Sun Communities and whatnot that are these massive giants that buy them kind of the institutional level. But kind of in between there's really not many players, which is great for us. Right? That gives us a much better opportunity to purchase them again off market without having to compete with 20 other offers and outbid everybody else just to get it, and then cut back our returns to be very slim, like what you're seeing in multifamily and other commercial spaces. And so there's plenty of supply out there. We have a couple of guys on our team that are just full-time acquisitions. They're the ones that are on the phones all day long calling campgrounds. But of course, being that there's plenty out there doesn't mean they're all of them are willing to sell. We just have to find the ones that are willing to sell first of all, and then can work out a price that works for the returns we're looking for, right? So yeah, but even with that, we have plenty of deal flow. We closed on 4 properties last year. We tend to close on hopefully at least 6 to 12 this year is our kind of our goal, that the high 12. But we'll be realistic, maybe about 6 to 8 would be great still. But so yeah, we still have lots of deal flow, and our I guess big bottleneck we have so far still is just the raising capital aspect of it, because this is still a somewhat new niche, and people don't quite understand what it is yet to feel confident to invest in this space, even with the great returns. And so we are, as we continue to grow though and get more, I guess, education out there and help people understand how it works and what we're doing, and especially as people start to come around and see those other returns getting slimmer and more risky, people are starting to open up to other asset classes that are out there. In fact, I've seen, and I guarantee everybody here listening will see, other deal sponsors who have primarily always been in multifamily or something else are making a transition, starting to acquire campgrounds as well. I've already seen a few doing it, and I've had a few contact us that want to work together. So I can guarantee you'll see more of that very soon, which is good because it'll help again get the word out there, and we'll be somewhat of a leader in this space already. But also it means in the near future, maybe another 2 years, it's going to be more competitive. For those returns going to come down, kind of like you're seeing it in other things. So this is a great time right now to get invested in this space, kind of at that initial cusp of it just about to take off, kind of like mobile home parks and self-storage were like 5 or 6 years ago when they were somewhat taking traction and people were starting to get into it. You'll see that here pretty soon as well. But yeah, so right now what we look for is our 2 basic criteria is we look for properties that are at least 100 existing campsites and up. That could be a mixture of RVs and cabins and glamping, whatever. And then the other big criteria is the location. We want something that's within about a 2-hour drive of a major city, right? If it's not near a destination itself, like something near, like say the Grand Canyon or Yellowstone or whatever, at least within about a 2-hour drive of a major city. So we have that built-in customer base, right? Those people that are going to have the RVs that don't want to take a cross-country trip, but still will drive a couple hours to go have fun. So those are kind of our 2 basic criteria, just the size and location.
I got you. Yeah, that's going to be my next question. So it doesn't have to be by a major sort of, say, tourist point, as long as you have that criteria where there's, in essence, traffic or population that will come to that site. It could literally be anywhere, right?
Yeah, exactly. We purchase across the country as it is right now. So we're open to anywhere where we can find something that the returns make sense for us.
Is there any mix between what's happening on that property that's more advantageous for you? If there's a bigger mix of RV parks, is that better than, say, glamping, or does it just not matter?
Well, I think we're still heavy on the RV side, because obviously that's our main client base. I say is the RVers that have a trailer or an RV they want to come and park there. But glamping is definitely a big value driver as well, as people that don't maybe have an RV or camper. You get your especially the younger Instagram crowd, right? They want to have those nice glamping pictures to share on their Instagram posts, right? Yeah. So that's been a big draw as well. But we don't think we'd have a full campground that's primarily that. But maybe, who knows? If it's in the right location where it makes sense, maybe if we got something like near, Orlando or something where that could probably work better. But just in general, we still prefer, the larger RV percentage for sure.
My wife introduced me to this. I didn't know what glamping was, and so she found that. She introduced me to this. She's like, "This is my camping right here. This is what we're doing for our camping trip. We're not sleeping on the ground. We're doing this thing." All right. Well, check it out. Yeah. Let's pick out some sites. Give us some recommendations. about where we need to be.
Yeah.
This is super interesting, and does feel like you guys are on the bleeding edge of and in front of the wave of the constant yield chase that we see from capital as large capital sources have finally gotten very comfortable with multifamily in a way that, multifamily from a risk perspective is now, I agree with you, to us is priced at a point where it feels more like investment grade corporate bonds, and we kind of look at that sideways because those two things have very different risk profiles attached to them and shouldn't be consummate in yield. So I think we look at this probably from the same sort of financial perspective where we see a little bit of a mismatch between returns and risk in some of these spaces that have been very popular for the last decade, where it is time to look at where can we get healthier returns when you see, savings accounts and CDs yielding 4+%. And then compare that to multifamily, maybe yielding 6 on a cash on cash basis. And you go, well, something doesn't seem right here. Where can I get real risk adjusted returns that are more consummate with this new interest rate environment? And it sounds like this fits the bill. Are you guys thinking about that the same way?
Well, kind of, yeah. As I said, the other benefit that you won't get from a CD or multifamily is that you can also enjoy it, right? We actually encourage our investors to go there and hang out, experience it, right? Have that firsthand experience and create memories with your friends and family, right? That something you don't do with other asset classes. So, yeah.
That sounds like a due diligence trip to me. So now I can don't let my wife hear this. We're going to be off to your multiple sites of glamping under the guise of due diligence. No, I'm kidding. No, this is great. We'll definitely have to explore this more with you, Don, on our level. Where can some of our listeners find and hear more about what you guys are working on?
Yeah, well, obviously visit our website, happycampercapital.com. You can register there. You obviously have access to see some things there, but being that we have done mostly 506B deals in the past, we currently do have a 506C fund that we have open now. But to get access to all that stuff in detail, you need to register on the website. So just register as an investor. There's no obligation, obviously, with that, but just gives you access to see everything and get you on the email list. And we have new opportunities come up. You'll be emailed about them, invited to webinars to check it out. So you learn more there. If you want to connect with me directly, you can find me on LinkedIn. I'm very active on there. Also on Facebook, or even on our website, happycampercapital.com. If you go to the About Us tab, you'll see my name and profile there. You can click on that, and then you'll find a link in there at the bottom right just to schedule a call with me directly and discuss your needs and goals and see if we can help you.
That's awesome. Don, thank you so much for spending some time with us and sharing this asset class and what you guys are working on. I really appreciate it.
My pleasure. Thanks for having me.
Awesome. And thank you everyone for listening. Until next time, bye-bye.